Hello, my name is Maria Besubova and you're at my channel Fertilizer Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Today I have a pleasure to host a great guest, Alberto Persona, who is Principal Analyst of Phosphates and Potash at S&P Global. I am glad to welcome you, Alberto, and thank you very much for joining me.
Thank you very much, Maria. Hello to anyone who is listening, and it is my pleasure to be here instead. I was looking forward to this since you shared with the Arab Fertilizer Association that you would be launching this channel, and I am very, very thrilled to be here for you.
Cool, thanks again. So today, together with you, I would like to step a bit into the closest future of phosphates and potash markets and what you foresee for Q2 and 3. Right now, we are in the middle of Q2, and obviously it was and still is a very, very turbulent year. And market dynamics has changed drastically since the beginning of the year. So let's first focus on the phosphates. And my first question to you is, which forecast that you did at the beginning of this year changed since then, and which did not, and why that happened?
Yeah, well, it has very much been a very eventful year, as you said. And I think overall, from my experience since January this year, if I looked back this morning at the forecast that we have for supply, demand, costs, and prices, where we are now is not too far off where we said we would be 3 or 4 months ago. But the way in which we got there was very different than what we expected. We thought in January, well, there's an overall scenario where prices remain relatively high and gently we will need to adapt to farm economics, and progressively prices will go down, maybe a little bit down, and trade will resume. Instead, we had much sharper behaviors. We had the Chinese industry eventually communicating that in February, that from April onwards, there would be some additional export availability. And as soon as that started, we saw a very sharp downturn of prices because suddenly there was a lot more to buy from. And that has created more competitiveness and just surprised us in terms of how quickly prices could decrease by almost $100 per ton, basically over the course of 2 or 3 weeks. That's maybe the thing that changed the most, the quick reaction of the industry to this availability, this extra availability, which also tells us maybe prices will shoot back up as quickly if this availability is to stop in the short term.
Right. And based on this, how do you see the demand itself for the rest of Q2 and maybe to the Q3? And which might be here the downsides and upsides factors?
So I think overall, even after this sharp correction, if you look at it from the point of view of a fertilizer distributor, an importer in general, even more so a farmer, the economics of fertilizer application are still a little bit shaky. So I don't think demand will suddenly explode based on fundamentals. What I personally foresee is that we have now this 3 months window when you can book more material from China. Everyone who is aware of these restrictions will try and book early. So I think you will have very strong demand. In May already it is happening, in June and maybe in July. And then I think it's going to be a lot harder for that demand to remain strong, because if suddenly the export quotas out of China are exhausted and the prices go back up, farmers and distributors can't really tolerate higher prices and demand will be weaker. So in short, I think very strong, urgent demand now, and maybe a little bit weaker in the tail end of Q3.
I see. You already touched a bit on that. Indeed, during these couple of months, we have seen quite a lot of news regarding policy changes across the globe. So first and the most important is China factor, of course, but other than that, also Indian subsidies. We see discussion about potential USA duties. So which of those changes do you think drove market dynamics the most? And which of those will still be in place and be developing, let's say, in the Q3?
Yeah, well, I think certainly the performance of Chinese exports will remain basically the single determinant of whether the international phosphate balance is loose or is tight. It's almost as if the Chinese industry had the power to turn on or turn off a 6 million tons plant overnight. So I think that will remain by far the most directly impactful. I think certainly second would come any changes to Indian subsidies. And even more importantly, the timing of revisions will be important because today, with prices going down, there could be a very strong temptation to reduce subsidies, saying, well, the price is going down, we don't need it anymore. But if you do it at the wrong time, you end up having less subsidy and the price is going back up, and that starts damaging your buyers, and indirectly, especially from the point of view of the government of India, your voters. Let's not forget this is an election year, so it's going to be very interesting to see what the timing of announcement will be. I think of the countervailing duties on in the United States as a very interesting topic, but to me, the thing that's most important is that every time one of the interested parties has asked for a revision or appeal, the relevant administrative bodies of the US have changed their view. Have been very few examples where they said, no, we actually agree with what we said 3 months ago, so it stays. It can go up, it can go down. The point is, people don't trust that the revision will stick. And these countervailing duties are, at least for how we understand them, they are retroactive, which means there is a huge importer risk. If we end up in a scenario where suddenly you can revive a lot of this Atlantic side trade, then you have a much more balanced and interesting market scenario. But at the moment, even if tomorrow they change them to even negative, saying, oh, sorry, guys, we will pay you back. We shouldn't have done that. It's not going to stick. And therefore, I don't think it has an immediate change in the supply-demand balance. Obviously, I have to mention as the additional one, who knows how strongly the conflicts in the Red Sea and in the Baltic Sea between, for example, Europe and Russia, will there be even stricter restrictions to trade coming out of conflict areas? That remains a risk. We always think as the fertilizer industry and agriculture in general as the last resort when it comes to these trade-based policies and sort of punishments, but it's always a risk that remains.
Indeed. And apart from India being, of course, the most important demand factor, do you see any other significant changes in the markets in terms of demand? I mean, in other parts of the world who are also large importers that might influence the market in Q3? What I mean, for example, Europe, which is in general quite weak in terms of demand, not only for phosphate, but in general for all fertilizers this year. And we have seen it clearly in Q1. And from my personal view, it was one of those forecasts which didn't come in a positive way for me personally. So how do you see what other factors might change the demand or influence the demand significantly?
No, I agree. Europe, with phosphates, you can skip one application or maybe two with limited impact on yields, and everyone, including myself, we were saying, well, this would be the third weak year in a row. It just can't happen. Farmers will have to buy more phosphates, and no, they didn't. So once again, weak application. And I think the only thing that's missing for demand to return is prices. Although regulation is playing a role, because in the past, for the past 2 decades, you can actually see how farmers would maybe apply a little bit less every 3-4 years, and then apply a little bit more to kind of build back. When the price is low, you apply a lot more. Regulations now prevent that. So you can at most apply a balanced level. It makes it almost impossible to recover from your losses in the soil. So I think what Europe needs is stability and plannability more than low prices. Maybe you just need less volatility, but good luck with that. I don't think that's going to come anytime soon, unfortunately.
Indeed. You already mentioned the situation that we all watched during December and the beginning of the year in the Red Sea. It was negatively developing, and actually it still is, let's say, negatively developing, putting more and more pressure at the seaborne trade. So do you think this Red Sea factor will be still in one of the most important ones in the Q3, or do you think that we are somewhere around, let's say, new normality with this factor?
So I think if we were to only look at phosphate fertilizers, especially the large bulk products like DAP or MAP, it's pretty clear that most exporters have already adjusted, because actually not a lot ammoniated phosphates were going through the Red Sea. You had some trial almost volumes going from Saudi Arabia to the Mediterranean, but already everything that goes from Saudi Arabia to the Americas was already going down the Cape of Good Hope in South Africa. Moroccan volumes were affected, but Morocco is sufficiently west in Africa that it's not hugely disruptive to go through the Cape of Good Hope again. Where it really is important is on the raw material side. Phosphate rock, phosphoric acid, and let's not forget sulfur and ammonia. Ammonia and sulfur now need to take a much longer route from going from the Arabian Peninsula and the Persian Gulf to Northern Africa in particular. You have Egyptian and Jordanian phosphate rock and Jordanian phosphoric acid now facing very big bottlenecks when going to India. So I think my expectation is that we will see the real impact of the Red Sea as less domestic production in Southeast Asia and Southern Asia, because you can't import the raw material, the phosphate raw material, as effectively. Therefore, more import demand. And with longer journeys, I think we will also see an effort into buying earlier. So there will be less spot activity and more company-to-company contracts for a share of output over a long period of time, like 3 or 6 months, or even a full year, if not multi-years, which is fantastic from the point of view of an exporter. It's maybe not as obvious how importers and farmers will need to pay for this stability that people would seek.
Indeed. And which factors, apart from that, do you think can support the price dynamics in Q2 and Q3?
Well, crop economics have deteriorated quite a lot, but there have been big impacts and changes in some of the grains and oilseeds. Of course, the future of wheat prices will be a very important determinant of farm economics, especially in Europe and to an extent Canada and the United States later in the year. We saw the absolute dismal scenes from the southern parts of Brazil, with Rio Grande do Sul being almost covered in water, and that did cause damage to the soya crop. I haven't looked today yet at the impact on soya prices, but certainly some of the sort of looseness in the crops balance might have been corrected. So with higher crop prices, you can sustain higher fertilizer prices. And it's really that dynamic of crops versus fertilizers. At the moment, fertilizers are still very firm relative to crops, but maybe instead of fertilizers going down, we will see crops going up.
All right. And let's now touch a bit the base regarding the potash. So, first of all, my first question would be, how do you think the market, if and how the market has adapted to the sanction policies for logic producers, which are in place already for some time, but so the market was still suffering in order to really adapt to those? So that's exactly comes into line with what we just discussed regarding the stability of the prices and supply in terms of potash. So here, the sanctions was the main factor that influenced the whole market. So will the sanctions further tighten, influencing the demand and price level, or will they not? What is your personal view on that?
Well, it's obviously always very difficult to forecast a policy, especially an international trade policy, which is not based on economic grounds, but on political and moral almost values. I think it is remarkable how quickly, in particular, Belarus Potash was able to redirect its trade flows towards the rail deliveries to northern China and northeast China, for example. Everyone was expecting that to happen, but it did happen very, very fast. The BPC didn't see their volumes decrease nearly as much as we had anticipated, and they are actively investing in new terminals and trade corridors. There's even, for example, a new trade corridor being discussed and agreed that possibly between the Eurasia Economic Union and the government of Iran. So you would go through the Caspian, you would then cross Iran on rail or road, and then suddenly material from Russia and Belarus can have access to the Persian Gulf. It's still quite a bit costlier and it does take time, but I think the market has genuinely very much adapted to this situation. One important element in this has been the speed at which Laos has increased its potash production. Between the faster than expected change of Belarusian potash from vessel to rail, and the faster than expected commissioning of potash and ramp up of capacity in Laos, China suddenly doesn't need with any urgency any of the individual contracts. It really still holds the market on its hand. Rail deliveries from Belarus and Russia have been quite frozen over the past couple of months because China even reached the point where they have enough stock. They don't need much more. But at the same time, Laotian production is understood to be a little bit lower now. There might be some issues with some of the mining structures there, so it could get a little bit tighter as of Q3. But at the moment, it's really a buyer's market for potash. We have a stable floor. We don't think it's gonna go much below, but we don't think there's a huge upside either.
I see. And I want to thank you very much, Alberto, for this great, insightful discussion. Myself and, of course, my channel viewers will be very glad to see you again, hopefully on a regular basis at a certain point. And I wish you all the best and the great Q2 and Q3 ahead.
Yes, indeed. Well, thank you once again, Maria, and thanks for everyone for listening. Good jazzing.
Thank you for watching. Please subscribe to the channel, put like to this video, and see you soon.